think Florida housing market is booming? Think again. Beneath all those sunny Instagram posts and retirement dreams, there's a market correction happening right now that's catching people completely off guard. Home values are crashing, insurance bills are going through the roof, statewide inventory is up 25% from last year, and homes are sitting on the market for an average of 74 days. We're not talking about a temporary slowdown. This is a legitimate market reset that's changing everything about Florida real estate. Is your city on the list? And what does this mean for you? Stay tuned as we reveal the 10 Florida markets getting hit hardest by the 2025 housing correction. Number 10, Deltona. With NASCAR, spring break, and Atlantic Ocean views, Daytona's got it all. But what the tourism brochures won't tell you about Deltona is that this coastal city housing market is showing some serious stress cracks in 2025. First, home values dropped 2.2% in the past year, bringing the median price down to $352,000. Now, this is a couple percentage points, and it might not sound alarming, but stick with me because there's more to this story. Yes, the real eye-opener is what's happening with volume of homes that are listed for sale. The listing has jumped up by 31% more compared to last year, with over 3,200 properties currently for sale. That's nearly twice what was on the market back in early 2023. And worse still, these aren't moving quickly either. Properties that found buyers in about 6 weeks 2 years ago are now taking over 2 months to sell. As if that was not enough problem already, the insurance numbers are equally killing the deals. Yes, depending on where you are in Volusia County, homeowners are shelling out anywhere from $4,500 to $6,800 every year just for coverage. For all those retirees living on Social Security and pensions, that's a budget buster they didn't plan for. Then there's the buyer drought. Remember 2022 and 2023, when everyone and their brother was moving to Florida? Remote workers, snowbirds, early retirees, they were everywhere. Well, that wave has crashed. Companies are calling people back to offices, the economy's got everyone nervous, and suddenly, that Daytona dream home doesn't seem so essential anymore. And now, some folks who bought at peak prices are already trying to get out, even if it means taking a loss. So, the bottom line is that almost 20% of sellers in spring 2025 had to cut their asking prices. Yes, Daytona housing market may not be in free fall, but the party's definitely over. Number 9, Fort Lauderdale. Fort Lauderdale used to be known as the Venice of America, with gorgeous canals, luxury waterfront living, celebrity yacht sightings, and everything special. Fort Lauderdale has been selling the dream for years. But in 2025, that dream's getting expensive, and buyers are waking up. The headline numbers show that inventory jumped 27% in just 12 months, with almost 20,000 homes sitting on the market. Properties that used to get multiple offers the first weekend are now lingering for months. A house that would have easily fetched $650,000 2 years back? Good luck getting $580,000 today. And here's where it really hurts. The cost of just owning a home here has gotten insane. Because Fort Lauderdale sits right on the coast, insurance companies see hurricane dollar signs. Waterfront property owners are getting hit with $8,000 to $12,000 in annual premiums. Even if you're not directly on the water, expect $6,500 to $8,500 a year. And that's just insurance. Stack on the HOA fees, and we're talking $600 plus per month in a lot of newer buildings. And suddenly your monthly housing cost is astronomical. People are running the numbers and walking away. The investment crowd is bailing too. See, during the crazy years of 2022 to 2024, investors grabbed up Fort Lauderdale condos like they were going out of style. Fast forward to now, and roughly a third of those investment purchases are being listed for less than what they paid. A third. These aren't patient landlords playing the long game anymore. They're cutting losses and moving on. Even the Airbnb game is dying. South Florida tourism has cooled by nearly 10%, and short-term rental occupancy is down 15% from 2023. When your mortgage is based on 7% interest rates and your rental income is tanking, well, do the math. A lot of hosts are throwing in the towel. Fort Lauderdale still be beautiful, But behind those Instagram filters, the market's in serious trouble. Number 8, Gainesville. Gainesville is the home of the Gators, college football Saturdays, and usually a pretty stable housing market. If you were like me, we have all thought that college towns tend to weather storms better, right? Well, not this time. Yes, even Gainesville's got problems in 2025. The genesis of the problems here are the duo of low price and increase in inventory. While the prices slipped 1.4% over the past year, settling at $349,400, available inventory climbed 28%, from about 1,400 listings to nearly 1,800. That might not sound massive, but in a smaller market like this, it creates real pressure. So what went wrong? The truth is that developers got greedy. They saw the pandemic housing rush and started building like mad in surrounding areas. Alachua, Newberry, you name it. Apartment complexes, condo developments, whole neighborhoods of single-family homes. Painfully, the supposed buyers they were counting on never showed up. Now you've got entire streets where every third house has a for sale sign in the yard. More to that is that locals can't afford to live here anymore because their income cannot accommodate the cost of the buildings. The typical household brings in around $48,000 a year, but the median house costs $349,000. If you do the quick math, you will find out that it's more than 7 times their annual income. But financial advisors recommend 3 to 4 times. So the market's broken for regular people. The situation would have been even worse except for low insurance. Yes, Gainesville's actually got Florida's lowest average insurance costs at just $2,558 annually, less than half the state average. Still, with job growth stalling and paychecks staying flat, this correction's probably got more room to run. The university isn't growing fast enough to absorb all this new housing, and the jobs outside education and healthcare just aren't there. In any case, Gainesville's still a nice place with charm and college energy, but the housing market still remains a huge stumbling block. Number 7, Tampa, St. Petersburg, Clearwater. Tampa Bay used to be the poster child for Florida's real estate boom, but now, not anymore. In 2025, the market here is under serious pressure, and the data's screaming warnings. Available homes have nearly doubled, from under 3,000 listings in early 2023 to over 5,400 now. That's an 80% surge in just 2 years. Why? Developers went absolutely crazy. Condos sprouting up everywhere, new subdivisions spreading across the suburbs, high-rises changing the skyline. They built like demand would stay hot forever. Except interest rates had other plans. At nearly 7%, the same house that cost you $1,900 a month in 2022 now runs $2,700. Same house, same location, just a brutal financing reality. Median prices dropped 1.3% to $400,000, and CoreLogic says there's a better than 70% chance they'll fall further. Now, let's talk about the elephant in the room. Everybody's selling. Investors who swooped in during the frenzy are now dumping properties 5 to 10% below what they paid just 2 years ago. Long-term landlords are calling it quits because property taxes and insurance costs have exploded, up over 45% since 2022. Speaking of insurance, remember when you could insure a house near the bay for under $3,000 a year? Those days are dead and gone. Same property now costs $5,800 annually, and waterfront places are looking at $8,000 to $10,000 or more. Hurricanes Idalia and Milton didn't just damage homes, they devastated the insurance market. Some companies packed up and left Florida entirely. The result? Homes are taking 46 days to sell versus 18 days 2 years back. 1 out of every 4 listings has had a price cut. Sellers are practically begging with free appliances, closing cost help, whatever it takes. Tampa was supposed to be the safe bet in Florida. But now, it's a reality check on how fast things can change. Number 6, Jacksonville. Biggest city in Florida by land area, southern hospitality, growing job market. Jacksonville checked a lot of boxes for buyers, but the housing market here is shaking, and the warning signs are everywhere. Inventories hit decade-high levels, nearly 4,000 homes for sale, double what was available in early 2023. The reason? Builders went absolutely wild in suburbs like Orange Park and Middleburg, cranking out subdivisions faster than demand could keep up. Then interest rates hit 7%. And suddenly, a $300,000 house felt like a $450,000 house once you factored in financing. Fitch Ratings says Jacksonville's overvalued by 26% compared to historical averages and local incomes. That's not a small cushion. That's a correction waiting to happen. Median prices stayed flat at $390,000, which sounds okay until you remember inflation exists. Flat in an inflationary environment equals decline in real terms. The local economy isn't helping. Jacksport, the big shipping hub, saw freight volumes drop 14% year over year. Less freight means fewer logistics jobs, less warehousing work, smaller paychecks across the board. When people aren't making money, they're not buying houses. Insurance costs have spiked here too. Flood-prone areas have seen premiums jump 60%, pricing out first-timers and making long-time residents reconsider whether they can afford to stay. Some folks are actually moving to cheaper towns further inland, just to escape the cost squeeze. And then there's the investor exodus. Big institutional buyers that were snapping up houses for rentals are now offloading them fast. Almost 1 out of every 5 listings is investor-owned, and they're pricing to move, even if it means losses. Properties are sitting on market twice as long as they did in 2022, 51 days versus 21. Jacksonville's still got appeal, but in 2025, the market's playing wait and see. Number 5, Lakeland Winter Haven. Tucked between Tampa and Orlando, Lakeland Winter Haven looked like the smart money play during the boom. Affordable, central location, growing population. CoreLogic has since flagged it as one of the highest risk markets in Florida for continued price drops. But here's why they're worried. Prices already fell 2.5%, dropping from $333,300 to $325,000 in just 1 year. And the bigger story is that inventory absolutely exploded. From 3,000 listings to 4,800, a 60% jump. For a metro area with only 270,000 people, that's drowning in supply. More houses, fewer buyers. You know where this goes. The culprit here is classic overbuilding. South Lakeland and North Polk County got hammered with new development from 2021 to 2023. Builders were convinced growth would continue forever, but that didn't happen. Also, with mortgage rates approaching 7%, affordability was destroyed, and all those spec homes are now just sitting there. At the moment, 31% of current listings, translating to nearly 1 in 3, are investor-owned. These aren't homeowners looking to upgrade. These are investors who bought during the boom and are now desperately trying to exit. Properties listed at $430,000 in 2023 are being marked down to $360,000, and they're still not selling fast. That's a 16% haircut on homes that are barely 2 years into ownership. Insurance went up 40%, even though this isn't beachfront property. And basic homeowner coverage that used to cost $3,200 now runs $4,500 to $6,000 annually. It may not be at the coastal level expensive, but it's enough to hurt. The local economy is slowing too. Lakeland runs on logistics, Amazon, Publix, big distribution centers. But freight volumes are down nationally, which means warehouses aren't hiring and trucking companies are cutting back. Fewer jobs means fewer people moving in, and fewer locals trading up. Also, home listings are taking longer to sell. According to Zillow, homes are taking 53 days to sell, more than double the boom period. Many are getting relisted below appraisal value just to generate interest. The truth is that Lakeland may have had its 15 minutes of fame as Florida's affordable alternative. But in 2025, it's learning that overbuilding and investor panic make for a rough correction. Number 4. Port St. Lucie. Port St. Lucie is one of the most disconnected markets in Florida right now. Florida Atlantic University crunched the numbers and found Port St. Lucie homes are priced 41% above where they should be, based on long-term trends and local economics. That's not a bubble. That's a pricing catastrophe. Look at the affordability gap. Median home costs $420,000, but the typical household earns just $62,000. That's almost 7 times annual income. Healthy markets run 3 to 4 times. This is completely unsustainable, and the market's starting to crack. Inventory's up 35% as builders keep delivering homes nobody can afford to buy. A lot of the pandemic buyers came from up north, New York, New Jersey, looking for warm weather and no state income tax. But recession fears, stock market jitters, and rising costs have scared them away. The out-of-state buyer pipeline has dried up. Builders are panicking. Some new communities have slashed prices from $430,000 down to $360,000, over 16% off, and they're still sitting. Sellers are throwing everything at the wall to see what sticks. $15,000 in closing costs covered, brand new appliances, interest rate buydowns, even covering a year's worth of HOA fees. When you're offering that much help, you're basically admitting the list price is fantasy. Infrastructure can't keep up either. Port St. Lucie grew way too fast for its own good. Schools are packed at 115% capacity. Traffic on US 1 is a daily nightmare. Water and sewer systems are strained. People who moved here thinking they'd found paradise are finding out it's overcrowded and underprepared. Insurance? Waterfront properties are looking at $7,500 to $9,000 annually. Even inland homes are facing $5,000 to $6,500. Stack that on top of already inflated home prices and mortgage rates near 7%, and the monthly cost is staggering. Prices have already dropped 1.2%, but analysts say Port St. Lucie has a long way to fall before reality and pricing meet. Gravity's undefeated, and this market's about to learn that lesson hard. Number 3. Cape Coral Fort Myers. Hold on to your hats. This market dropped 9.6% in 1 year. That's not a typo. The median home price fell from over $410,000 to $375,000. This Gulf Coast paradise went from being one of America's hottest markets to one of its fastest corrections. Context matters here. From 2022 to 2024, Cape Coral Fort Myers was on fire. Prices rocketed up 65% in just 2 years. When you climb that fast, the fall's gonna hurt. And boy, is it hurting now. Available homes more than doubled. 3,200 listings in 2023. Over 5,000 today. They're sitting twice as long too, averaging 60+ days. That means competition between sellers, aggressive price cuts, and deals falling apart. Hurricane Ian in 2022 broke this market's back. Not just the storm damage, the insurance aftermath. Average homeowner premiums shot up to $9,000 to $11,000 annually, even in neighborhoods that barely got touched. Coastal properties? Try $13,000 to $15,000 or more. Some insurers just left the state entirely, making coverage nearly impossible to find at any price. The investor and snowbird money evaporated. These groups drove the boom, but they're gone now. Economic uncertainty, crushing insurance costs, rising rates. It all added up to no thanks. Tourism's down too. Fewer hotel bookings, fewer seasonal residents. Vacation rental income shrinking fast. Airbnb owners are listing properties at fire sale prices just to escape. Local buyers still can't afford to step in. The typical household here makes under $60,000, but even after a nearly 10% price drop, homes are still too expensive. First-time buyers and young families remain priced out. Cape Coral's got unique headaches too. All that frenzied building created massive oversupply. Plus, utility hookup fees are insane. Some new homeowners are hit with $30,000 plus bills for water and sewer connections. That's an instant deal breaker. This market's textbook boom to bust. Beautiful location, year-round sunshine, but the housing market's taking a long time out to sort itself out. Number 2. Northport, Sarasota, Bradenton. Sarasota's been the definition of upscale Florida living. White sand beaches, art galleries, affluent retirees sipping wine at sunset. But in 2025, this luxury market's hangover is brutal. Prices crashed 9.9% in a single year. The inventory situation's out of control. Over 3,700 homes for sale now versus 1,800 2 years ago. That's more than doubled. Premium properties that easily got $1.2 million in 2023 are struggling to attract $975,000 today. High-end segments have seen 20% drops in some cases. The median's down to $475,000. What killed Sarasota? First, it got way too expensive. Zillow pegged it at 38% overvalued compared to fair market value back in 2022. Eventually, reality had to set in. Mortgage rates over 6.75% scared off the luxury buyers who could have absorbed the prices. This market relies heavily on wealthy retirees and second home buyers, typically boomers with investment portfolios and retirement savings looking to cash out for Florida sunshine. But 2024's stock market volatility, persistent inflation, and economic uncertainty made a lot of them rethink. Why buy an overpriced second home in an uncertain economy? Insurance is absolutely crushing this market. Waterfront properties in Sarasota, Bradenton, Longboat Key, and Siesta Key are facing $8,000 to $12,000 in annual premiums for basic coverage. High-end waterfront places with comprehensive policies, flood, wind, umbrella, are paying $18,000 plus. That's $1,500 a month, just for insurance on what's supposed to be a vacation home. Days on market tell the real story. 91 days average now, versus 32 in 2022. That's nearly 3 times longer. Realtors are pulling out every trick. Aggressive price cuts, fancy open houses, closing cost credits, even furniture packages. Anything to get buyers through the door. About 40% of listings had price reductions in spring 2025. Many by $50,000 to $100,000 or more. 6-figure price cuts. Some ultra-luxury homes listed at $2.5 million in 2023 are now marked under $2 million and still getting no action. Northport, the more affordable part of the metro, is drowning in inventory too. Massive suburban development created thousands of homes nobody wants. Some neighborhoods look abandoned with for sale signs lining every street. Sarasota's still gorgeous. World-class beaches, thriving art scene, that legendary Siesta Key sand. But the housing market's in serious pain, and experts think there's more downside ahead. And the #1 most troubled Florida housing market in 2025 is Naples and Marco Island, Florida. Buckle up, because this is historic. Home prices in Naples plummeted 15.8% in just 1 year. The median crashed from over $670,000 in 2023 to approximately $565,000 by mid-2025. That's over $105,000 in lost value in under 2 years. Luxury waterfront properties? Some are down 20 to 25%. That's not a correction, that's a collapse. Inventories at crisis levels, 7,932 active listings, up nearly 29% from last year. We haven't seen numbers like this since the 2008 financial crisis aftermath. And here's the scary part. 34% of all these listings have already cut their prices. Over 2,700 homes where sellers have admitted their original ask was too high. So how did one of Florida's wealthiest, most exclusive markets end up here? First, the valuation got absolutely stupid during the pandemic. Naples' home values inflated over 70% between 2020 and 2022. Luxury condos that traded for $800,000 pre-pandemic were selling for $800,000, $1.4 million by 2023. That kind of run-up has nothing to do with fundamental value. It's pure speculation and FOMO. Second, the ultra-rich buyers who fueled this madness disappeared. High net worth individuals who were buying second, third, Even fourth homes here in 2021 and 2022 are now completely absent. Whether they're worried about the broader economy or just waiting for better deals, they've stopped buying. And without them, this market has no floor. Third, insurance costs in Collier County are absolutely unconscionable. Premium waterfront estates are paying $15,000 to $25,000 annually, just for basic coverage. Ultra-luxury properties over $5 million? We're talking $40,000 to $50,000 per year. Fourth, supply keeps coming. Luxury condo towers that started construction in 2021 and 2022 are finishing now, precisely when nobody wants them. Developers are offering ludicrous incentives. 6 months of HOA fees covered, $100,000 plus in closing credits, fully furnished units, even throwing in luxury cars. When you're giving away a Mercedes to sell a condo, you know you're desperate. Fifth, Florida's new condo regulations after the Surfside disaster created a secondary crisis. Buildings need regular inspections and fully funded reserves now. Older towers are hitting owners with special assessments of $50,000 to $100,000 or more for repairs and reserves. Condo owners are panic selling to escape these bills, flooding an already oversupplied market with desperate inventory. The psychology here has totally flipped. 2 years ago, Naples was bidding wars and gone in a weekend. Today, homes sit for months in prime locations while sellers watch their equity evaporate. Agents say sellers are still in denial, anchoring to 2023 peak prices instead of accepting that the market's changed. This disconnect is creating a stalemate that could drag on through 2026 and beyond. The data's brutal. Over 8,000 homes for sale, nearly 2,800 with price cuts, some by hundreds of thousands of dollars. Open houses that used to be packed are now empty. Naples is still one of Florida's most beautiful spots. Pristine Gulf beaches, championship golf, world-class dining, cultural amenities. But in 2025, that luxury lifestyle comes with a housing market in absolute free fall. This isn't just Florida's worst correction. It's one of the most dramatic housing crashes anywhere in America right now. Final take. From Naples' shocking 15.8% crash to Daytona's more moderate 2.2% slide, one thing's clear: the boom days are over. Secondly, what do these markets have in common? Prices that got disconnected from reality, an insurance crisis that's making homeownership unaffordable, overbuilding that created massive supply imbalances, investors bailing as the numbers stopped working, and income-to-price ratios that local buyers simply can't support. But here's the critical takeaway. This is a correction, not a 2008-style catastrophe. Most markets are seeing 1 to 3% declines, painful if you bought at the peak, but not apocalyptic. The market's normalizing after an unsustainable run-up. So, if you're buying, 2025 might actually be your window. You've got negotiating leverage, plenty of choices, and motivated sellers willing to make concessions. If you're selling, however, face reality. Price competitively, expect to negotiate, and understand the market's fundamentally shifted from 2 years ago. Florida's housing boom is finished. The correction is underway. But which markets recover fastest will depend on job growth, insurance market stability, and whether prices can drop enough to restore genuine affordability. The next 12 months will separate markets with real economic fundamentals from those that were just riding speculation. Make your moves carefully.